can no longer sell on just promise. The seed rounds are promise. The most important thing you can do is prove that the thing you thought was true is true.
We're excited to welcome David Hornik, founding partner at Lobby Capital, Forbes Midas List Venture Capitalist, and Deloitte's Venture Capitalist of the Year. With over 20 years investing in game-changing companies like Splunk, Fastly, GitLab, Build.com, and Ebase, David has shaped the future of enterprise software, fintech, and consumer tech. A pioneer in the VC world, he created the first venture capital blog and podcast, teaches at Stanford and Harvard, and has curated talks for TED and TEDx Stanford. In this episode, we dive into David's journey, his approach to supporting visionary founders, and the lessons he's learned building transformative businesses. In your opinion, what are the biggest value that a VC gives to a founder, and besides the money?
We are your cheerleader in chief. When you're trying to hire astonishing people, one of the great things to do is say, hey, meet David Hornik. David meets 1,000 companies in a year and he funds one. So why would he do that? You should ask him.
David, what's the biggest misconception people have about venture capital today?
I mean, there are a lot of different ways people think about venture. The people who think that this is a transaction business, that the job of venture is about finding and doing deals, are wrong. This turns out to be a relationship business. This is about meeting amazing people and figuring out how you can help them to meet and hire amazing people and build a product that gets sold to amazing people that, like it's a people business. And so I think that there is, particularly as AI is kicking in and it's all about tech, that they think, this is a transaction business, it's a tech business. It's not. This is a people business. And there's no great business on the planet that bad people haven't ruined. There are a lot of pretty mediocre businesses that great people have built into giant opportunities.
That's a great answer. I mean, from your perspective, you founded Lobby Capital for a reason. What was the reason behind it?
I've now been in the venture business for 25 years. 25 years ago, I was an attorney. I was representing startups. I thought that startups were magic. Like here I was as the lawyer who was trying to help you build your business. I was drafting your contracts. I was helping you raise money, but I was a service provider, right? I was this guy on the side and you'd call me up and say, hey, get me a contract, and I'd get you a contract. And I wanted to be in the game. I wanted to be part of the team. And so as a lawyer, I spent a lot of time saying, how can I be helpful to you? I went to my clients' offices. I stayed up all night. I got work done just so they would think of me as a resource, more broadly than just a, service provider. And that worked. It turns out that my clients then would rely on me for all sorts of interesting stuff. And that was great. And as a result, I got to opine on things that were bigger than just the law. And 25 years ago, an extraordinary venture capitalist named Dave Marquardt said to me, have you ever thought about the venture business? And I was like, yes, of course I have. And he said, great. And after a bunch of months of talking to me, he said, lawyers suck at this, but we think you might be good at it. And so if you're willing to give it a try, we're willing to let you try. And so why don't you join us and be a VC? I said, oh, that sounds great. And then I had to figure out, what does that even mean? What does it mean to be a VC? And over the last 25 years, I've learned what it means. It means, to work with extraordinary people, to try and find extraordinary entrepreneurs and hand them money that empowers their businesses to do things that they couldn't have done without the money, and then sit on their boards and try and engage with them in ways that help them to be more successful. And so Lobby Capital is an extension of that. It is then great. How do I engage with the very best set of humans as my partners? How do I extend that network to be valuable to the entrepreneurs that I'm backing? And so I've got this conference and a set of gatherings I run called The Lobby that brings together hundreds of amazing people and creates this community. And so by creating the firm that I would have wanted if I was an entrepreneur, I think I've been able to create a lot of opportunity and value for great entrepreneurs, those I backed, but also those I haven't backed. And I think that's been amazing. That's been the goal.
David, what does Lobby symbolize in the whole ethos of the company?
The Lobby is a reference to this gathering. And what happened was I was going to all these conferences to meet great people. Most of what you did at your typical conference was sit in a dark room while someone was on stage talking. Worst case, it was a panel of people and each person would opine on some topic for 3 minutes. And all I wanted to do was meet the person to the right of me and the person to the left of me. And so I literally stopped going in. I spent all my time in the lobby. Because in the lobby, you could have a real conversation. You'd bump into someone and you'd say like, oh, what are you working on and whatever, how can I be helpful? And you'd have this conversation for 15 or 20 minutes, which was way more interesting than the stuff that was taking place on stage. And so I launched this gathering 20 years ago called The Lobby, where there are no speakers, there are no panels. It's 250 amazing people come together in Hawaii, on the beach, on the lawn, and talk about the stuff that's important to us. And some of that's business, and some of that's about our lives, the government, the economy, very big picture. How can we work together to help the collective group at the lobby be successful? And I think that gestalt, that idea that we can create a collective of extraordinary humans who will work together to make everybody successful, is reflected in the lobby VC, and is reflected in the lobby gathering, and then is reflected in this community of people that's now, 2,500 people have come to some lobby or another.
Tell us about a story, that breakout story, a moment where you met a founder and you invested in them, and it's an incredible company today.
There are all sorts of, amazing people I've met through the lobby. I'd say that the vast majority of the companies that we fund are companies that have some connection or other to the lobby, right? I literally closed a deal at the lobby. It was a smart founder who I really liked and thought was building something interesting, and he had a lot of interest in his company. I said, you should come to this lobby gathering, meet a bunch of smart people. It's a bit of a double-edged sword because I invite a lot of amazing investors to the lobby. So suddenly here are these investors meeting this extraordinary entrepreneur. The last day of the conference, I said, hey, you want to catch up and let's take a walk on the beach and chat about what you're doing. And by the end of that hour-long hike, we shook hands on the deal and said, great, let's go build a company together. Like I say, it is a double-edged sword. I had seed funded this really fantastic entrepreneur named Chris Terlica, who's the founder of MaintainX. And I said, oh, Chris, you have to come to the lobby and meet smart people, see how they can help you build your business. And then he met a bunch of investors, and those investors all were like, oh my God, this is a really interesting business. He comes back from the lobby and said, I have, this person want to fund my Series A. And I said, yeah, no, you can't do that. What are you looking for? How much money, whatever? I'll fund your Series A. I want you to go focus on the business, etc. So I think that the lobby is great because I think Chris has met a lot of extraordinary people there that have helped him build MaintainX, but it also was the sort of forcing function for me to lead the Series A at a time when others were excited. It plays lots of interesting roles in how I think about the business.
David, as far as venture capital is concerned, what are in your opinion, what are the biggest value that a VC gives to a founder? And besides the money, besides the actual financial funding?
There are just a ton of things that a good venture investor does over time. We are your cheerleader in chief, and that means a lot of things. But when you're trying to hire astonishing people who have lots of choices, one of the great things to do is say, hey, meet David Hornik. David meets 1,000 companies in a year, and he funds one. And we were the one. So why would he do that? You should ask him. Why did he fund, MaintainX instead of the other 999 he saw that year? And I think being in a position to be able to share that information, to say, here are all the reasons why I think this particular entrepreneur and this particular opportunity are extraordinary, is valuable. So we do a lot of selling. We help you raise money. We help you hire great people. We introduce you to lots of clients and all that stuff. But the other thing that I think is important is we are a good investor is in your team in ways that are really valuable, because being a CEO is hard, right? There are not a lot of people that you can lean on. You're running a company that's growing increasingly large if all goes well. And those people all report to you. And so when you have concerns, it's very hard to share those with your team. It's hard to share. You need someone who you can share. these are my concerns, and this is hard, and I'm having a tough time, right? This is challenging. And I think that a good investor is that person. It can be that support system. I think of myself as a psychologist as much as I am a finance guy. I spend a lot of time with the entrepreneurs I back trying to help them, give them perspective on how to make sure that this doesn't eat them away, And I think that's super valuable, and I think it's important. And then the other thing I'd say is, look, I've been at this 25 years. I was a lawyer representing a bunch of really smart and big companies before that. I've seen 4 amazing companies go from a handful of people to public companies worth more than $10 billion, thousands of employees. So wherever you are on that spectrum, I've seen some version of it in ways that I think is valuable. And every journey is different, but I think it's valuable to be able to say, here's some ways that can go really terribly, so you should probably not do that. And here's some ways it goes really great, and so think about those.
So David, you said obviously being a cheerleader in chief, the network, being that sounding board. But the one that I'm really keen to double click on, because it is quite unique in venture capital, is your background. You come from this legal background, right? What value does that background that you have offer to your portfolio companies and the founders?
Well, the legal piece is actually teeny tiny fraction of it, right? There have been times I have profoundly saved the asses of my companies. Now, that is more a reflection of the bad attorneys representing the companies than the fact that I'm a good attorney. But I will tell you, in a very recent instance, the company attorneys got it really wrong. I called bullshit. We spent time on the question. They ultimately acknowledged I was correct in my assessment of the problem, and it saved the company in a very important way. So that's great. But that's like teeny tiny fraction. It turns out that good lawyers have been very well trained in the broad logic of the universe, right? Like the law is about, here are a set of rules, here are a set of ways to think about it, and here are risks and related opportunities. And so I have this weird combination of things that have been super valuable to me. I have the legal training that says, hey, how do you apply logic to these interesting and challenging problems? And I'm dyslexic. So how does that help me? Well, and by the way, being a dyslexic attorney is a really terrible idea. But here's how it's been astonishing. What dyslexics are really good at is being able to take a limited amount of information and extrapolate out to good decisions, right? Because we have a limited amount of information as just a matter of course. And so the combination of apply extraordinary logic in a rational way and understand risks and rewards, and be able to take a limited amount of information and extrapolate out opportunities and risks is disproportionately valuable when you're thinking about companies where they never know everything, right? It's always a teeny fraction of the information that you need to determine whether this thing's going to work or not.
As a lawyer, you've got all this information, all these documents you have to review when you are a lawyer. As an investor, it's the detail, right? It's what's between the lines. It's the things that you might miss out on. The simple things that changes the game. Is that what you're referring to?
It's this weird thing. It's like detail and big picture, right? There are details that matter, and lawyers are detail people. They understand what matters. And then there's the bigger picture question, which is bad lawyers say, hey, here's the law, so you need to comply with it. And good lawyers say, hey, here's the law, and here are the implications if you fail to comply with it. When someone has a contract, the contract sets up a construct that says you need to do these sets of things, and if you do not do these things, it's a breach of the contract. That doesn't mean you can't do those things. It just means you have to understand what are the repercussions from not doing those things, right? And so I think good lawyers understand that distinction, right?
David, going back to a different point, right? So what would you say is broken or perhaps misunderstood in the dynamic between a founder and a VC today?
Every company is different, because humans are humans, right? So there are lots of people who are looking for different things. And I think that in the end, this is a human engagement. We're not a set of computers interacting. To be really helpful and successful and create real value, you have to understand who the person is you're working with. What drives them, what inspires them. If you can't understand that, you're really not going to be that helpful. I was recently struck by this because I was trying to invest in a company, and it was a guy I knew super well. I looked at the deal and what he was trying to do and what he was trying to raise, and there were just a very small range of opportunity there. And so I went back and gave him a term sheet that said, I'll invest X number of dollars at Y valuation. I said, just fill in X and Y. Whatever it is, I'm perfectly comfortable. You're not going to do something crazy here. And so you fill it in and you tell me what the answer is. And the founder was just flummoxed and unhappy with me. And I talked to one of our closest mutual friends, and that friend said to me, David, that was you blew it. That was a terrible answer. And I said, why do you say that? And he said, well, this particular founder loves negotiating. Like, he finds that fun. He wants to engage in this back and forth, to demonstrate that he can create value, etc. And you just said, no, I don't want to do that. Just give me the number and we're done. He said, and that just ruined his day. And I said, yeah, but that's so stupid because I'm saying I'll do whatever you want. And he said, David, that's not what he wanted. What he wanted to have a conversation about what was fair and what was appropriate and make progress and whatever else. And I said, oh my God, you're so right. So by misunderstanding this entrepreneur, I offered what I thought was a fantastic term sheet and was terrible. And by the way, what that entrepreneur then did was go out, said, now I have to go out to a bunch of other people and figure out what the market is, etc. And I said, yeah, I know. And he went out and talked to a bunch of people and comes back and he said, look, the market is blah, X $1 million valuation. So if you'll do it at X plus $1, then I'll do it with you. And I said, yeah, of course. I told you I'd do it whenever, So I think you have to understand what are the dynamics that drive humans. There is no fixed answer to any of these things. It's what is the answer for this person that's going to help them be happy and successful and drive the business forward.
It's interesting you say that. So going back to your first point, you said venture capital is about relationships, and what's broken or perhaps might be misconceived is this idea of needing to build that relationship. And to build that relationship, it's understanding the individual. And in that situation, is perhaps in a way playing the game, right? This is what they like. This is what's going to make them happy.
No, that's what it was. I hate that whole back and forth these days. When I give you a term sheet, I just say, look, here's the term sheet. Here's the stuff you don't like. Here's the stuff I'm not going to like. Entrepreneurs are like, okay, but you're just trying to game me. And I'm like, no, I'm not. I just don't want to have that. Can we just skip the 3 conversations before we get to the 2 things you care about and the 2 things I care about? And what happens is entrepreneurs, because they weren't the lawyers and they haven't done it a bunch of times, they then go to their lawyers and say to the lawyers, all right, here's what Hornik said. He's clearly gaming me in some way or the other. So what is the game? And the lawyers say, no, that's those are the things, And then they come back and go, all right, our lawyer said those are the things. I'm like, I know, I told you.
I completely see it. I mean, the relationships is fundamental in these engagements. And I guess in many ways, that dynamic of the founder having to pitch to the investor switches once you want to put out the term sheets. There's an element of now you've got to pitch to the founder. You got to get them excited about taking your term sheets.
Yeah, let me tell you a quick story about that because it's totally right. I was talking to Travis Kalanick when he was raising his Series A for Uber. I had backed Travis's previous company, and Travis and I knew each other really well. And he came to the office and he was like, David, I'm getting a lot of pressure. Do you want to fund the company or not? And I was like, Travis, you're supposed to be coming and pitching my partnership. This was on a Friday. You're supposed to come in on Tuesday. And he's like, I know, but I can't wait because I'm getting pressure from this person, that person, blah, blah. And I said, Travis, I'm going to let you in on a dirty little secret adventure. I said, there is no pressure. And he's like, what? I said, until such time as a VC gives you a term sheet, they have all the leverage. They have all the cards because it's like, you have to figure you're trying to get them to agree to fund you. I said, the second they give you the term sheet, you have all the leverage. Because I spend a year looking at 1,000 deals to give one term sheet. If you say to me, hey, I'll give you an answer next week, what am I going to say? No, I'm going to say, okay, but please take my money. So I said to him, Travis, there is no rush here. If people want to give you a term sheet, you should say, thank you so much. I'll get back to you when I get back to you. Which was good advice. Travis did not make it through the weekend. He ended up taking Benchmark's term sheet over the weekend, which I knew he was going to do. But it is the case that if he had said to Benchmark, I'm excited about your offer, but I'll talk to you next week, Bill Gurley would have said, all right. Like, what's he going to do?
David, the thing is, what's interesting about that is it's very similar to hiring, right? When you're hiring for Lobby Capital or a company's hiring for their business, the candidate is in many ways pitching to the hiring manager. And I know there's an element of having to sell both ways, but the leverage is with the hiring manager. It switches the moment the intent is to hire. So it's quite a similar dynamic in that sense. And obviously to close a candidate, it's very similar to closing a founder, right? Understanding the individual and building that relationship.
Actually, when an entrepreneur, because I said to you, one of the things I do a lot is help my companies hire great people. When an entrepreneur introduces me, CEO says, David, I'd like you to meet with this particular candidate. My question is, am I buying or selling? Have you already decided that this is your person, in which case I will gently ask questions but spend my whole time selling? Or do you actually want feedback, in which case I'll figure out whether this person is good for us or not?
David, going on to a different point, right? So a lot has changed. We went through 2021 and post-pandemic where there was a bit of a mirage in the market, right? We don't know what's real. A lot of funds, coming out of nowhere with lots of capital, a lot of dry powder, and AI comes into play. So a lot has changed. What do you think has changed in the last 5 years?
I'll tell you the biggest change is, well, when I started in the business, there were angel investors, then there were Series A investors, and then there were late stage funds, and then companies went public. And the seed investors were a bunch of people who've been successful tech investors, right? Andy Bechtolsheim, who made a bunch of money starting Sun Microsystems, then put the first money into Google because he liked those guys, and then they built Google into a big business. And then Josh Koppelman came around and he said, I have been one of those successful people. He made a bunch of money selling a couple of companies, and he was an angel investor, but he said, why don't I have a fund? I want to invest in more of these companies. And he created First Round Capital, which was the first seed fund. And that changed everything, because then it was like, oh, wait, you could build a fund and be seed investors. Now there are more than 1,000 seed funds, of $100 million kind of $50 million kinds of funds. So that changed. Then the late stage changed dramatically. First, there were just a bunch of people who put a lot of money into it, right? Said, oh, there are big outcomes. Suddenly, you could be a Facebook and go public at $100 billion valuation, which meant you could put a lot of money in and still make money at $100 billion. And so now there's just an infinite amount of money in late stage. And these firms that used to be kind of early stage became multi-stage, become giant firms. And so you have an Andreessen Horowitz with tens of billions of dollars, and Excel with billions, and Lightspeed with billions. And it's just a very different thing. I'm an early stage investor. My life has not changed a lot, because you're meeting smart people. They have an interesting idea. They have some evidence that it's working. What we call product market fit. Oh, there's some folks using it, but not a lot. And you have to decide, is this an extraordinary person, and can this be an extraordinary and big business? But the second there's a lot of signal, there's infinite capital that's chasing it. It's changed a lot.
Late stage funding how dissimilar is that from private equity as far as the multiples that the late stage funds are looking for?
I don't think it's hugely different, although actually I would say that private equity is getting better multiples these days than some of these late stage funds, because they are price insensitive. They're putting in huge amounts of money at a very high price because they have a lot of dollars to put to work. And so I think that late stage funds, we're just marching towards the end of this thing where there seems to be less opportunity for returns, but they're bigger dollars, right? So if you put in $300 million and you double it, like, you've made $300 million. And that's a lot of money in the aggregate. But I put in $10 million and make, 500 or 300 or 600 or whatever in my best opportunities. And so the multiples are way better. The only question is whether the late stage folks get to those outcomes dramatically more often than I do, because that's the only way they're going to make that work.
Regarding the shift in the market over the last 5 years with AI, I guess less from a funding venture capital perspective, but the landscape of artificial intelligence. Every company is now an AI company. There's so many companies coming out. We're seeing a lot of engineering talent looking for term sheet as opposed to their next gig, right? So there's this new excitement around starting companies, and with the technology that is available, it's easier to build these products, right? How has that changed the VC game?
I think it has changed. I think people are getting traction more quickly with fewer people and, et cetera. What is not clear to me is whether that's long-term sustainable or not. I think what we're going to see is that, and historically, The slope of the curve up has been by and large the slope of the curve down. If you gather a lot of momentum quickly, a small number of companies maintain it and a large number of companies see the backside of that. And I actually think that AI is going to exacerbate that. It's going to speed the growth, but I think it's going to speed the competitors and the whatever. Now, there may be a small number of folks that ride it to big, long-term, big, large-scale opportunities, and we're going to have to see what those are. And I'm not talking about Anthropic, and I'm not talking about OpenAI, which are these, core fundamental models. I'm talking about people, application builders. They're building applications sitting on top of AI. I don't know. I'm worried about that. I'm worried about sustainable competitive advantage. I think that it is harder for people today to describe a sustainable moat to me in their business. And that's really challenging because historically in the venture business, that's one of the most important factors. Is okay, you win, but how do you defend what you've built? How do you continue to be defensible even when you are the winner? I think it'll be interesting to see how that plays itself out. And I just had a pitch before coming on here where it was like extraordinary young entrepreneur, very good early traction. How sustainable is it? How big is the moat? I don't think we have a good answer to that.
One thing that I'm seeing is that sustainability is a very key piece in this, because to give you an example, we have a lot of this amazing L5, L6, L7 engineers who 2 years ago we can place them in some of the most incredible tier one backed startups, right? And it's an easy sell. Now they're not interested in that. They want to start a company. The challenge that I think a lot of these founders are going to have is the inexperience of building, right? Where you have serial entrepreneurs who've been there, done it, and they're doing it again. AI is going to speed up the growth, but how many of these companies are going to be able to scale? Because you've got the other issue, right? As you said, to your point, some of your companies are coming to you to do that final sell to convince a candidate to join. With these engineers that are looking to start their companies, how many of them are going to struggle in convincing all the engineers out there to join them, as well as how many of them are going to be able to convince customers, right? So I guess the question for you is, do you see there being a challenge for those founders who are much earlier in their career starting a company? They're very smart, they've got an incredible product, they get term sheets, but the challenge becomes that consistent product market fit, because that product market fit never ends. So how do you sustain product market fit?
Well, I think it's a bigger picture problem than that. Entrepreneurship is very different from being an engineer, right? Being a great entrepreneur is a multifaceted challenge, and it changes all the time. And some people have done an astonishing job over time of growing with their business. I teach a class at Stanford on sort of entrepreneurship and venture capital, and Dylan Field came in to talk to the class about building Figma. Dylan had this near-death experience along the way when he was a great engineer, an extraordinary engineer, but was an inexperienced manager who had kind of pissed off his engineers early on in the process by being too much of a micromanager. And then he figured it out, and he retained a bunch of those engineers, and he figured out how to grow the business. And now he's taking a company public that's hundreds of millions of dollars in ARR. It's a product company first. That's a big sales and marketing business, right? And so the Dylan who was in his 20s building this great product is very different from the Dylan in his 30s who is needing to be a public company CEO. That's very, very hard and very rare. And what you're describing is even more acute at the front end, which is like, okay, we have these extremely great engineers who have a product vision, but they don't have a clear sense of the market, of the customer, of the whatever. And sometimes that's fine. Sometimes someone truly innovative can invent something that creates a market. But most of the time, that's not it. Most of the time, the winner is the great salesperson, not the great product, or the great product, but not the great innovation. I'm former intellectual property attorney, and so people are like, oh, we have all these patents. And my answer is, I don't care at all. Patents are profoundly uninteresting compared to your ability to solve a real problem for your customers that they're excited about,
Moving on to another topic, right? When it comes to investing, you look at thousands of pitch decks, and as you said, you write one term sheet, maybe a few a year. How do you choose between the different founders that you meet?
I wish I had a good answer to that, right? Because I've backed all sorts of different. It's not like, oh, I think that VCs are narcissists. And so maybe the answer is like, oh, I'm looking for someone like me. If you're a super manic, little Jewish crazy person, then count me in, because I know that's who I am. But that's not really who I'm looking for. In fact, I'm trying to think if I've backed anyone who sort of falls in that category. I've backed all sorts. I've backed introverts and extroverts. I've backed deeply technical people and people who have no technical expertise at all. I've backed. So I don't have a great answer to like, who are you backing? What I can tell you is I'm looking for people who genuinely care about the problem they're solving. If people come to me and they say, I think this is a problem that's going to make a lot of money, I'm really not that interested. Because what I'm interested in is, I think this is a really big problem and I have a solution I think would help people. It's a big market, so if it does solve a bunch of problems, it's probably really valuable, but the thing that's brought me to it is the problem. And then I'm looking for people who are thoughtful. So when you say like, hey, what about this thing or what about that thing? They don't say like, oh, I know the answer, or whatever. They say, oh, that's a good question. Like, here's how I think about it, but what do you think? Like, how can we wrestle through these bigger, harder problems? So people who think they have all the answers are not compelling to me. I'm looking for people who have good answers to the things they have answers to, and then have a lot of questions about the things they don't have answers to yet.
Do you ever index on that founder market fit? Do they have the right background and experience and credentials to build this product?
Yeah, I think it's overblown, to tell you the truth. I funded a really wonderful guy named Michael Doctor. He is a doctor. His name is literally Doctor. And he was the chief innovation officer at Boston Children's Hospital. And he is a tech nerd, and he just saw a very clear problem within the information flow within medical systems. Obviously, that's extraordinary. He has a very clear founder market fit. He's going after himself and people that were like those that he surrounded himself with, and so that's great. I backed this guy named René Lacerte, who was building a payroll company, and he had come out of building Intuit's payroll, and his parents had built payroll, and his uncle had been payroll, and great. But, I backed an entrepreneur named Bill Clerico, who was this 20-year-old who was going to build a payments platform who didn't know anything about that, right? Like he just was a great, thoughtful entrepreneur who was like, I think there's a problem to be solved here, and he just learned a ton, and he built it, and it was smart. Or, Chris Terlica, the founder of MaintainX. It's not like he had come out of the maintenance business. It's not like he had said, oh my God, I've been trying to manage the operations for this giant concrete plant. He just was like, why in the world, if you're managing a big operation, are you still using paper and clipboards when people have smartphones in their pockets? So I think great entrepreneurs see problems and they go figure out how to solve them. And I don't think that it matters that they lived in that universe as long as they work hard to figure out what the real problem is.
As far as red flags are concerned, right, when you're funding companies and you have companies in your portfolio, what sort of red flags do appear quite early in that funding process once you've backed them?
Well, I already talked about one, which is if I ask you questions and you give me certain answers to things that lack certainty, then forget it. There are real questions that will have no answer. And if you give me an answer to unanswerable questions, that is dumb. We work hard to figure out if you are, someone who will push the boundaries of truth, fairness. I'm not interested in pushing at the outer edges of legality or morality. In the couple of instances where I've gotten that wrong, I've lost all my money. Every time. I have never made money on someone who I have said, oh, wow, I actually think that I was wrong and this person is not a great moral actor. In those instances, I have always lost money. You work hard to try and figure that out before. When you do, it's something.
David, as far as the fund is concerned, right, another interesting topic that we like to talk about on the show is for the funds that are starting out, as you described them earlier, the people who made a lot of money and they're interested in investing and they want to start a fund. How do you convince LPs to buy into you? What are the key attributes of an investor that LPs care about when parting way with their money into your fund?
Well, there are really two answers. One is You've demonstrated the capacity to find amazing businesses that turn into giant businesses and fund them. There's nothing an LP wants more than to say, oh, you were the first investor in Facebook? Great, I'll give you money forevermore. And boy, that really worked for Excel for a period of time. It still works great. Now, you can't, you have to keep funding great companies, but if you've funded a truly astonishing breakthrough company, that entrepreneur is willing to get on the phone with an LP and say, I took David's money because I loved him, he saw something others didn't, and that was amazing. LPs are like, okay, great. Because they want to find people who can do that again. These days, the second thing they're looking for, because if you haven't done it again, then what do you do? Like, how do you, and so the question is, they first have to predict. Right, the number one question is deal flow. Will you see big, interesting deals? So if you think that someone will have a path to the big, interesting opportunities, then you might fund them. And so why? Why might they see that? Are they uniquely well situated because they were the analyst who did all these amazing deals? Where they were the journalist who saw it? They were an amazing, lawyer who was the lawyer to the stars. They are a movie star who can get in front of any deal, whatever. And now then there's also technology. We built some extraordinary technology that we think is differentiating for X, Y, and Z reason, right? With Lobby, we had a bunch of partners who had done deals that were very successful. That's step one. Because I run this lobby gathering of extraordinary humans and have built this big network of thoughtful entrepreneurs who have really helped each other to be successful, I'm able to lean into that community and say, look, there are 2,500 people who've come to some lobby conference or other who are truly in the camp of how can we help lobby capital be successful. And the LPs say, great, that's a powerful differentiator compared to other early stage funds, and so maybe we'll give you money.
David, just double clicking on the deal flow piece. Now, it's obvious why deal flow is important, but why is it important to LPs that you're someone that has access to a lot of deal flow?
I mean, there's no way to do great deals unless you see them. If you're not seeing the most interesting deals, then you'll be funding the less interesting deals. Very few people see the best deals. There are a very small number of transformative deals in any given year. Right? Let's say, in a good market, you're taking 10 or 20 companies public in a year. So, any given year, there are 10 or 20 great deals, and it's fewer than that because those are the accumulation of the ones that have worked. So if you didn't see one of those 10 deals, you're not going to have an outsized fund. Over the time I've been a venture investor, I've funded 45 companies, and 5 of them have been worth more than $1 billion, and 4 of them have ended up being worth more than $10 billion. And those numbers work. It's okay that the rest weren't, because I saw, 4 or 5 of the biggest deals that will then drive the economics. If I didn't see them, or if I only saw half of them, my fund is not going to be successful. And so you have to say to yourself, are you going to see the next one, right? Hopefully Maintain X is the next one. And great, that's good. But then what's the one after Maintain X? You're only as good as the next one. It is imperative that you actually are seeing the most exciting, most interesting deals in the world, or you will not be able to be economically successful.
It's like what we say as recruiters, you're only as good as your last month or your last deal.
You're only as good as your best client who comes back to you. You're only as good as the great venture investor says, hey, can you help me with my next company, right? The business does not have residual value except in helping you to see the next great opportunity.
David, as far as starting a company, when we're talking about that initial initiation process, you've started a company, you've got funding. What advice do you feel like you would love more founders to know about that journey? Because one thing I hear a lot is that Series A is and I don't know if you have a different opinion, but I hear this a lot. Series A is the most difficult one because the seed round, someone believed in you, you started it, but to get that Series A, you've got to prove it actually worked. And I don't know if you believe differently, but in that journey from seed to Series A, what advice do you feel you wish more founders knew?
It turns out they're all impossible for what it's worth. It's just always impossible. I think that entrepreneurs are astonishing, and they deserve the credit they get because it's just impossible. I'm going to come up with an idea and convince you to give me money because of my idea. Seems like magic. And then I got the idea, and then I hire some people, and then, okay, I'm going to get you to give me some more money to help me build the thing. Etc. For the Series A, you can no longer sell on just promise, right? The seed rounds are promise. It's like, this is a great idea. You should give me money because I'm a great entrepreneur. I have these thoughtful people who are going to help me build it, and it's a great idea. And you say, okay, fine, I'm going to give you $1 million to do that. But Very few people give you $10 million to do that. What they'll give you $10 million to do is say like, oh, you have a few customers and they say they like it. You built a platform and 10,000 people are using it. The most important thing you can do is prove that the thing you thought was true is true, right? Prove that the problem you thought you were solving was a real problem, and that the solution that you thought was a real solution is a real solution. And there are no shortcuts. There's no cheat code to that. If you're building an enterprise product, you need enterprise buyers to say, I think this is great. The best case is they pay you for it because there's no greater validation than I'll give you money for it. But at a minimum, you need, for me to be able to call someone up and say, is this thing valuable to you? And have them say, I could not do my job without it, or I never want to lose this thing, whatever. That's the job, is go raise money and solve problems for people.
David, moving on to a different topic, the human side of investing, right? How do you balance that empathy with your decision making? Because you know this better than anyone. These founders are coming to you with a pitch deck. They put their life and soul into it. They believe fully in what they want to build, and you have to let them down. How do you balance that empathy when you're making that decision?
I think it's hard. I mean, because if you look at it, right, 999 times out of 1,000, I'm saying no, which means that you only need one yes, but it doesn't matter. It doesn't make the no hurt any less. And so I think you just have to be a decent human. You have to give people a no. It's amazing how many venture investors hear a story, hear this great thing, and then they just never say anything. How horrible is that? I think you have to be thoughtful about it, right? And I think it's tricky because the reality is that I give people an hour to pitch their business, but in many instances within half hour of the pitch, it's clear to me that it's not a good fit for me for lots of reasons. For both of us, it would be a better use of our time if I said to you, look, I just don't think this is the right fit. And so here's why. Why don't we finish up this meeting a half hour early? I'll give you a half hour back, whatever. You cannot do it because it's very delicate. Like as you say, there's so much caught up in this that if I were to do that to an entrepreneur, they'd be like, you didn't even hear the story, so you're just a jerk, right? As opposed to you're trying to be helpful or thoughtful. I have in many instances said to an entrepreneur at the end of one of those pitches, look, I think your challenge is this. Here's what you're describing, and I'm trying to be helpful. I'm trying to help you in your next pitch or whatever. And easily at half of the time or more, they get very defensive and sort of angry that I'm jumping right in with this. I receive emails from entrepreneurs. I occasionally give in to, and mistakenly email them back. I'll get an email from some young entrepreneur that has emailed 40 VCs, and they're all copied on the email. I promise you that an email to 40 VCs that says, I think you might find this interesting, will get no answer. All 40 investors, 38 of those investors will just delete it, and a few will say like, okay, it's not a fit for me, whatever. And so I often will say, hey, just an FYI, this is not a good fit for me, but just an FYI, in the future, you may want to write individual emails to the VCs that explain why it is you think your business is a good fit for them. It will help you be more successful in getting a next conversation going. 1 in 4 of those entrepreneurs writes back, hey, I appreciate that. And then they usually say, so how about you take another meeting or whatever, which is fine. 3 out of 4 say either ignore it or tell me what a jerk I am. I think it's tricky. I think there's a lot of human emotion caught up in these things.
It goes to my follow-up question to that, which is you're having to say a lot of no's and a few yeses. How do you build that long-term relationship in a high-stakes game like venture capital when you're saying so many no's to so many potential founders who might one day be the next big founder, right? You want to maintain that relationship. So how do you maintain that?
I think most people don't, to tell you the truth. And it very much depends on the person, right? Who they're coming in with, what they're coming to you. And look, I think there are plenty of ways to be helpful, right? And so it's like, hey, this is too early stage for us. I mean, if it's really interesting, but it's just too early, then I have introduced people to other investors. Like, oh, who'd be a really good fit for that? And in some instances where I'm the wrong investor, introduce them to other Series A investors. Like, who might be good? Whatever. Mostly I try and be serious about like, hey, you might want to think about this thing or whatever. Splunk, which is, was my most successful investment. I funded 3 smart entrepreneurs who then built a thing that ended up being a platform that literally informed big data across the entire enterprise, ultimately sold to Cisco for $30 billion. It was a big, interesting business. I met with those founders for a year before I funded them. Their first business I thought was interesting and I liked them, but I did some work on it and said, your customers don't care that much about this business. And they were like, well, why do you say that? And so I gave them the feedback from the customers and they're like, oh, that's interesting. And they kept working at it. And then they came back to me with the idea for Splunk and it was like, yeah, that. And then I introduced them to a bunch of potential customers to see if those customers thought it was interesting, and they all did. And then I gave them a term sheet and I funded the company. Like, that's, of course, a dream version. You have a great conversation. It lasts over time, whatever else. But it can happen,
Do you find you do that a lot? Like spend a year less or more building that relationship with founders before you back them?
I spend years building relationships with smart, interesting people before I hear a business they're working on that might be interesting or not. Again, I don't think the venture business is a transactional business. I think the venture business is a relationship business, right? My sister-in-law was asking, is this a slow week for me last night at dinner? And I said, well, let me look. And I said, I have 37 meetings Monday through Thursday. And she was like, what are those meetings even, And there are a huge range of things. Like, it's a podcast because that's fun. It was a pitch meeting that I had. Yesterday, it was a breakfast with a really great entrepreneur who I haven't backed, but I was her freshman advisor at Stanford a decade ago. 2 days ago, I was on Zoom with a woman I met through the Stanford Alumni Association who's this really interesting chemist and it was not about anything. It was just a conversation. We ended up spending all of our time talking about generative AI and creativity. It was such a great conversation. Do I think she's going to start a business I back? I think it's extraordinarily unlikely. Was it an awesome conversation? Yeah. So I think you should like people if you're in this business, and you should want to spend time with them and you should want to get to know them. And at some point, someone might come to you and say, hey, I was thinking about this thing. There's a company, Pay Near Me, that I funded now 15 years ago. Danny Shader, the founder, his daughter and my daughter were on a soccer team together. And once we realized that we both were kind of living in the tech world, when we went to tournaments, we would drive together because it was just more fun to hang out. And we spent all this time. And then eventually he was like, hey, David, I have a new company if you want to hear the story. And I was like, yeah, of course I want to hear the story. And then he took someone else's money, not my money. And I had to convince, wait a second, we spent all this time. I had to fight my way back into this company. And eventually I funded him. I've been working with him now for 15 years. And he is just the greatest guy. He's just a phenomenal entrepreneur. Is such a thoughtful guy. That business is a triple-digit $1 million business. So I think it's going to be a great business. But even if it weren't, you know what? Danny and I have a 20-year relationship, and that's been amazing. So there are a lot of things that make this business great.
In the very beginning of the show, you said that you, being a lawyer working with these companies, you had this itch and you just wanted to get involved, and you started to fund. And all these years later, you've had so much success. You've got so much wisdom and so much advice. Do you still have that love for this industry?
It's amazing. Think about that. You fund these people are here's a good idea. Maybe I can make this thing work. And when it does, it's sort of astonishing. It's hard when it doesn't because you actually love these people and you want them to be successful. You feel badly. But last Friday, I went for an hour-long walk. No, I guess it was a 2-hour-long walk now to think about it. It was the last one of the day with an entrepreneur I backed early who the company just failed, and he's got his new idea, and he's so excited about it. And I was like, oh my God, so soon. But he and I, spent 2 hours talking about the new idea he's working on. He's a great guy. And so, yeah, I'm so love this job.
I know the feeling, honestly. As a recruiter for almost 2 decades now, I still get up and high five when a candidate gets that first interview. Final question I have for you, because I've really enjoyed this, and we can probably go on for another hour. One of the most important things that I feel like is vital for founders is constantly learning, constantly having their fingers on the pulse, constantly being in this industry, being relevant and learning. And one of the ways that people learn, one of the ways that I love to learn is to read a lot. I'm an avid reader. I love to read books about venture, about the Silicon Valley, about all the amazing things happening in our industry. Is there a book that you've read that has truly resonated with you, and one that you would happily give to every company you back and say to this founder, you know what, I'm giving you these term sheets. Thank you for accepting, but read this book?
I would be remiss if I didn't start with, I told you already I'm dyslexic. Reading is so hard for me. It's amazing how often I have these conversations where people are like, oh my God, read, what have you read? What have you read? What have you read? And I've given talks about dyslexia, and I always say, like, you know what, smart people read, but really smart people get other people to read for them. And I mean that in a very broad sense. I listen to lots of books on Audible because that's the best way for me to consume them, although it's very slow relative to having conversations with smart people like you and having you tell me like what you learned from those books. The book that I give out the most, and it is completely shameless, I will tell you, is this book by Adam Grant called Give and Take. And Adam Grant's book starts with this story I just told you about Danny Shader and about Danny, liking me, but then not taking my money and ultimately taking my money. So like I say, totally shameless to give someone a book where the first page is about you, but oh well.
I've read it, by the way. I've read the book.
I'm glad. And it's a great book, right? Because what it teaches you is exactly what I've just been saying, which is people who are givers, who are trying to help others be successful, ultimately will be the most successful business people. It is not about taking. It is not about what can I get out of this, whatever. It's about giving. That's a sort of boring answer. So I'm going to give a second answer. There's this fantastic book called The Biggest Bluff, and it's by a social scientist named Maria Konnikova. And Maria decides she's going to play in the World Series of Poker, even though she's never played poker before. And so the book is kind of about her journey of learning the game of poker. But what's interesting about it is that she's a social scientist. What she's really doing is observing. She's a brilliant person. Like, you couldn't do this if you weren't extraordinarily brilliant, which she clearly is. She observes the ways in which poker players underestimate women, the ways in which they have tells that they don't know because they think there's certain things that are telling and other things that aren't, etc. And so it's about this game, poker, but it's really about human interaction and observation and assumptions and all these things that I think are super interesting. I strongly recommend The Biggest Bluff. It's a fantastic read, and if you read in between the lines, there are a lot of lessons.
What would you say was the biggest takeaway for you from that book?
It's maybe people who underestimate people based on a set of expectations are going to get their lunch eaten. And they do, she takes advantage of them in such a satisfying way.
One of my biggest lessons from today's episode for me is, and you said it from the very beginning, and even with the book you recommended, is the importance of relationships and building those relationships and not making any assumptions. So it's how I've built my entire career, and obviously it's been definitely a pleasure having you on the show. Made a lot of notes here for my team, and I'm sure this is going to be an awesome episode to go out. But yeah, I just want to thank you. Thank you so much for making the time and being on the show.
Super fun. I appreciate you having me.
Likewise. Thanks, David.
This podcast was brought to you by Serrana Labs and powered by Harrison Clark. At Harrison Clark, we're at the heart of Silicon Valley's evolution and at the intersection of search and venture, funding the companies shaping the future and connecting them to the most elite cloud, data, and AI talent. To learn more, visit harrisonclark.com. If today's episode challenged your thinking, then share it with someone who's driving innovation. For even more insights on achieving product market fit, subscribe to our newsletter, The PMF Playbook, where we break down the journey from zero to product market fit. Visit thepmfplaybook.com. For more episodes, follow us on social media or visit insidethesiliconmind.com. Until next time, stay curious, stay consistent, and stay inside the Silicon Mind. See you soon.